put the spotlight on Tech Mahindra, and we've got CP Gurnani, the Managing Director and CEO, as well as Rohit Anand, CFO, Tech Mahindra, joining in to dissect the quarterly performance. Thank you so much. And Mr. Gurnani, I'm going to begin with you because there has been quite a bit of uncertainty that you started the monthly evaluation of demand trends rather than quarterly this time around. Therefore, that's caused that uncertainty. So what is the reading from the latest discussions? Is the demand slowdown structural in nature according to you, or is it just a few quarters of a bit of cautiousness?
On a macro environment, there are trends which are not uniform. The trends like, for example, Australia or Japan or in Asia, or they become better when you come to Middle East. I mean, there is definitely a sense that they are doing better. Similarly, when you are in Europe and US, there are sectors which are doing better than others. So my feeling is that this period of uncertainty will last for another 2 quarters. And we as a company have decided that we'll continue to invest. We'll continue to, look at some of the, trends or what I call the momentum in technology and build on that. So we are launching a massive upskilling program, which we started 2 months ago, because we believe that there is a lot of unmet demand, particularly in quantum computing, in metaverse, in data sciences, and in cloud technologies. So overall, the company continues to be in the investment phase, and I think we will reap benefits in 2 quarters from now because we would be more ready for the future.
Rohit, you are far away from your earlier EBITDA guidance of 14%. Realistically speaking, do you see that happening in FY14?
Yeah, I mean, I'm not, as we have articulated in the past, I'm not giving any guidance on any number, but from a perspective of what we have driven in the current quarter on variable cost and on productivity, we'll continue to drive that. We made certain investments which is long-term in nature, which is why you see some cost increases in SG&A. I think that will normalize as we move into the next quarter. But overall, from an annual perspective, I think our view on expanding margin, as we said in our investor day in the past and even earlier, continues, and those levers still stand true for us, and not just short-term, or in long-term basis. We articulated our metrics of expanding geographical reach to Americas and Europe more than the rest of the world, and we continue to work on that on a long-term basis and drive some of those areas of growth.
CP, since you are talking about investments, we have seen a sharp decline of almost 4,800 crore headcount in Q4. How would you explain that?
A lot of our headcount, as you know, is distributed between IT and BPO. BPO tends to be seasonal because, when the retail goes down, that some of the BPS work also goes down. So that, I think, is that monthly agility, which is proving that as a company, we continue to be agile and we continue to focus on upskilling and reskilling. Number 2 is that, by definition, when you are 160,000 people and with a 14.8% attrition, there is a certain loss. And at this stage of automation, I have been cautious in making sure that investment is more on upskilling and reskilling instead of hiring and putting people on the job. So I think it's just a fine balance, but overall I think as a company we have got this resource management as a dynamic balancing right, and I do believe that we have finally applied data sciences into our resource management also.
All right, gentlemen, good to have you both on board. Thanks very much for giving us those details. So the period of uncertainty